Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1526A, and today's date is March 20th, 2018, and the title of the episode is Europe Short on Dollars. This could trigger a liquidity crisis. Let's get into the economic collapse financial news. Now, the central bankers, they have been pushing their illusion, like they've always done in the past, that the economy is doing well and there are no problems whatsoever. We're seeing no signs of recession. Employment growth is strong. Jobless claims are low and the stock market is up. We hear this all the time. It's happening every single day since 2008. And they continually tell us that things are going to get a lot better. We also see the corporate media now starting to turn because Trump is putting forth his economic policies. And we are starting to see that things are starting to change. Now, the corporate media and the Fed, they were out there, and the government, they were out there saying that the U.S. economy has been growing by 2%. And since it's been growing at 2%, how could we have a recession anytime soon? Well, if you look back in time, we can see that January of 1980, the U.S. economy grew by 1.43%. July 1981, 4.39%. July 1990, 1.73%. March 2001, 2.30%. December 2007, 1.87%. If you look at each of those dates, the economy was clearly growing, but each of those dates is the growth rate of the economy immediately prior to the onset of a recession. And if you remember in the year 2000, the media, analysts, the economic community, they were all out there saying, listen, the economic growth, it's not going to decline. We're going to see growth into the foreseeable future. There's no signs whatsoever of any type of recession. And they kept on saying this over and over and over. Of course, 1 year later, what did we see? We saw a recession. And what we're seeing right now is that they continually keep us in this illusion. They don't let on to what is going on. They don't want you to know what's going on until the very end. And of course, what they do is they go back in time. A full year later, after the annual data revisions had been released by the BEA, the Bureau of Economic Analysis, the recession was officially revealed. But of course, it's too late. We're already in the recession, and they're just telling us what we already know. They always tell us at the back end, oh yeah, by the way, this is when it really started. And we've learned something from all of this. By looking at the past and looking at what is happening today, we know three things. The economic number reported today will not be the same when it is revised in the future. The trend and deviation of the data are far more important than the number itself. Record highs and lows are records for a reason, as they denote historical turning points in the data. Let's look at jobless claims, for instance. This is a data series currently being touted out there that, wow, the job market is incredible. It's the lowest we've ever seen. There is no recession whatsoever. And they show this graph showing 2008, 2009, all the way up to today, where the trend line is declining. And it's showing that, we were at, 10% unemployment, and now we're down at 4.1%. They're going to say it's going to go even lower than that. But if you back up a little bit and you open up the graph going all the way back to 1967, you can see that there's definitely a trend that each time unemployment reaches a very, very low level, we enter a recession or a depression. This has happened in 1971, in 1974. This has happened in 1982. This has happened in 1990. This has happened in 2001. This has happened in 2007, 2008. And we are at the lowest point since 1974. maybe even 71 right now. And this tells us this next crash, it's going to be a lot worse than before. Then if we go and we look at retail sales over the last few months, we can see that, well, retail sales, they are not doing well. They have this cycle that goes up and down. And we can see right now we are in a downward trend. We were in a downward trend starting in 2006 going into 2007. It picked up speed in 2008 and it was a complete disaster. If we go back to 2000, that's when the downward trend in retail started then. In 2001, it declined. We entered a recession. Here we are again in 2018, and we see the same exact trend. We are declining right now. The same thing has happened in the past. There's no difference. The only difference is we're much worse off because they have created this illusion. The other interesting aspect of this is the rise in consumer credit as a percent of disposable personal income. What is interesting to note is the rising level of credit card debt required to sustain retail sales. So basically, more people have to use credit just to keep retail where it is, which tells you something. So we have low jobless claims, retail sales remaining exceptionally weak. There are two reasons for this which are continually overlooked. The first is that despite the longest run of unemployment growth in U.S. history, those who are finding jobs continues to grow at a substantially slower pace than the growth rate of the population. If you don't have a job and are primarily living on the government support, which by the way, is 1 of 4 Americans receive some form of benefit, it is difficult to consume at higher levels to support economic growth. Secondly, while tax cuts may provide a temporary boost to after-tax incomes, the income boost is simply being absorbed by the higher energy, gasoline, healthcare, borrowing costs. This is why 80% of Americans continue to live paycheck to paycheck and have little saved in the bank. It is also why wages have continued to stagnate. The cost of living now exceeds what incomes and debt increases can sustain. So when we look at this, we can see that this pattern, we have seen this pattern over and over and over again. This time, it's not different. This time, it's exactly the same. Plus, they've created an illusion that's much worse than past recessions. Because we never really came out of the 2008 Great Recession. All they did was extend it for 7 years. And when it crashes, and when all the manipulation is exposed, and the domino effect takes effect when the derivative market completely breaks down, and everything starts to fall apart, and we find out the banks are completely insolvent, well, it's going to be pretty darn scary for many, many people. Now, Wall Street is out there, and they're expecting the global growth to turn bearish. And they're saying that they don't think global growth is going to continue on. They're thinking that things are going to start turning downward. It looks like Wall Street, the central banking system, certain governments who want their gold back, like Hungary, they're all preparing for something much, much larger than we are being told, which I do believe is the downturn of the economic system. The other thing that is happening right now is that Europe is running out of dollars. Now, the European interbank market is going through the biggest shortage of U.S. dollar liquidity in nearly 9 years. Now, they're saying this is because of U.S. tax reform. This may be behind the largest deficit since the financial crisis. European lenders, they are short of dollar liquidity, according to Raiffeisen Bank. The analysts stress that the U.S. currency is moving back home, and that is causing the deficit. Global growth rates of monetary supply have dropped to a minimum level since 2007. Now, analysts are out there, And they're saying that the limited availability of dollars might trigger a new liquidity crisis, which can be followed by a systemic financial crisis and a global recession. Now, think about what is happening right now. They're saying that dollars are being recalled back to the United States. Well, yes, they are, because Trump right now is having corporations bring these dollars back to the United States. We also understand that the petrodollar system is dying, and there's a lot of countries that are dumping the dollar. And we can see out throughout the world, dollars are heading back to the United States. Now, when this happens, we are going to see hyperinflation here. But what's very interesting about all of this, and this follows what we were talking about yesterday in the report, where the tax cuts, where the tariffs, with the debt, which we've reached 21 trillion, with the central bank pushing interest rates higher. Remember, there's a battle going on right now. Trump, I do believe, and the patriots behind him, and separately the central banks, they're both trying to push their narrative of why the system has crashed. They need, someone to blame on. They need to point a finger. And Trump, by recalling all those dollars from all those corporations that were moved overseas, a lot of the corporations keep their cash hoard overseas because they don't want to be taxed. Trump has removed a lot of this, and a lot of the companies are starting to bring the cash back here to the United States. Plus, we have tariffs and other tax cuts and things like that. As you can see, this is building right now. And I think what he's trying to do is he's trying to bring the system down. He wants to control the narrative. This is why they're saying there's a cash shortage in Europe, and this might trigger a new liquidity crisis, which might be followed by a global recession. Now, let's look at this for a second here. The globalists, the deep state, the central banks, they were setting the entire system up for a globalist type of system, a one world currency, one world government type of system. And they were doing this very slowly with NAFTA and other World Trade Organization. They were trying to push TPP and many other things. This was their big push. It is being dismantled right now. One organization, one law at a time. And as you do this, the system's going to start to break down. And you need to bring it down in the way that you want. You can't just have it come down, because then you can't really control that well. I'm not saying it can be controlled, but you can create the narrative. You can create the story of why this is happening. The deep state, the central bankers, have been doing this for years, trying to convince everyone it was never their fault. They always blamed it on something else because they had everything already set up. So if you saw the subprime securities back in 2008, that was a setup, so they had something to blame all of this on. The same thing with other recessions, because this is how the central bankers work. They make money on the way up, and they make a lot more on the way down. And we see right now, the Trump administration, the patriots behind him, realize what the central bank is doing. They are raising the interest rates very, very slowly. And if you notice, when he came into office, they bumped it up like twice, maybe 3 times. While Obama was in office, they really didn't do that much. And the reason for that is because they needed to start the push. They started to unwind, and the ECB is starting to unwind. So they're already removing the juice from the economy. They know when they do this and they raise interest rates, it's going to affect a lot of things. Student loans, real estate, auto loans. They know these are the things that they were able to control. If they can start a domino effect, they can bring down the system, which they know it will come down. They know that they've been keeping it up. They know exactly what they're doing. I mean, the everyday person doesn't realize what's happening. Trump knows what's going on. The patriots behind him know what's going on. And this is why I think he's pushing this agenda. What we're seeing right now is this huge push to gain the narrative of the whole economic structure, to explain why this is happening. Now, if Trump is able to convince the American people that it was the central bank, that it was the globalists that did all of this, how hard do you think it would be to push the bill to audit the Fed? I think that would go right through with no problem whatsoever. If that is then done, and he's able to audit the Fed, and there is a group that's already prepared and ready to go in there and audit the Fed, what will they find? Which would then be presented to the American people, which then would show that this organization, this private corporation, was not working for the people of the United States. It wasn't working for the people around the world. They were working in their best interest. And if they dig even deeper, they will most likely find out they were funding the deep state, covert operations. Most of what we're seeing was a lie. They've been manipulating gold and silver. The fiat system is a lot worse than we even thought it was. We even thought it was. And this would give the administration the power, the people, the government officials, the states, to say, we don't want the central bank. And guess what? The central bank at this point in time could be pushed out. So we can see how this could play out and how the entire system right now is teetering on the edge. And again, it's not going to be an easy period of time when the system comes down. Because once you bring down a system and you bring down the central bank, which then brings down the Federal Reserve note, which brings down the currency that we're using today, you need to transition into something completely different. And this is going to hurt. It's not going to be easy. Just like when the Soviet Union fell. And many other countries, when we went through different types of resets. And as we are the reserve currency today, we might not be tomorrow. So things are going to change dramatically. And this is what the country is being prepared for. It's being prepared for this transition, for a new economic system, and I do believe without the central banking system. So it's going to be a bumpy ride. You're still going to need to be prepared and ready for what is coming. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.